Welcome back to the Deep Dive by Talk Tickers. We break down the earnings calls so you don't have to. Today, we're digging into Arcturus Therapeutics Q2 2025 call. They're, a big name in mRNA therapeutics and vaccines.
And right off the bat, we have to talk about the market reaction. I mean, it was explosive.
Yeah, the stock jumped over 30% almost immediately.
Exactly. A move like that, it tells you this wasn't just meeting expectations. This was something bigger. It forced a real rethink for investors.
Totally. Way beyond what the options market was pricing in. It signals genuine surprise. So let's get straight into the numbers, the sort of clean beats that kick things off.
Okay, financials first. Revenue came in at $28.3 million for the quarter.
Which was way above the consensus, right? What was that number again?
Street was looking for about $17.6 million. So yeah, a really significant beat on the top line.
Now, I did notice revenue was down compared to last year's Q2, which is around $49.9 million. Is that just the COVID program maturing, moving from that heavy R&D phase?
That's exactly it. They're transitioning with their partner, CSL, towards, commercialization and milestones for the COVID vaccine. So the big upfront R&D payments are winding down.
Okay.
But the fact that the remaining collaboration revenue was so much stronger than expected, that clearly pleased the market during this transition phase.
Got it. And the bottom line. That seemed to be where the real shocker was.
Oh, absolutely. GAAP EPS was a net loss of only $2.34 per share.
A 34-cent loss.
Yeah.
Compared to Wall Street expecting, over $1 loss?
Yeah, the consensus estimate was a loss of 111 cents. So they beat that by a huge 77 cents per share. The total net loss was just $9.2 million for the quarter. Very manageable.
Wow. Okay, so the street was definitely bracing for a much higher burn rate.
They were. And this just shows a really exceptional financial discipline, and that take away the cost management, that's kind of the crucial context for why the market reacted so positively.
Right. Let's dive deeper into that financial discipline, because it wasn't just about the EPS beat. It was also about the cash position, wasn't it?
Right.
De-risking things.
Correct. They finished the quarter with a really solid balance sheet. $253.4 million in cash and investments.
Okay.
And crucially, management confirmed this cash extends their operational runway well into 2028.
Into 2028. That's significant.
It's huge for investors. It means, they likely don't need to raise capital before some potentially massive clinical readouts, especially that big CF one coming up next month.
Avoiding dilution right before a major catalyst. Investors love to hear that.
It provides certainty. That's invaluable in this sector.
So how did they manage to stretch the runway that far? Almost 3 years of certainty.
Well, it really came down to focused operational streamlining. Total operating expenses dropped significantly.
We mentioned that earlier, yeah. About 44% down year over year.
That's right, down to around $40 million. And that reduction was mainly because the COVID program costs decreased manufacturing clinical trials as it moves towards commercialization.
Makes sense.
And it allowed them to shift resources effectively to prioritize their wholly owned assets, the rare disease programs, that's CF and OTC. Those are really the key long-term value drivers everyone's watching.
Okay, let's pivot right there to those core value drivers. Arcturus has this two-pronged strategy, right?
Yeah.
Partnered vaccines for validation, and then these wholly owned rare disease assets for the bigger upside.
Exactly. And right now, the market is laser focused on the cystic fibrosis program, ARCT-032.
This one feels like it's getting very close to a major moment.
It really is. It's an inhaled mRNA therapeutic targeting CF, but, and this is important, it's specifically aimed at Class I subjects.
Remind us why that's significant, the Class I patients.
These are the modulator non-responders. Basically, the patients with the highest unmet medical need, the ones current advanced therapies don't really help. They're deliberately going after the toughest patient group first.
And they're using their LUNAR delivery system to give, what sounds like incredibly high doses.
That's the really unique part of this trial, I think. They finished dosing the first 9 participants now. And the higher dose cohort, the 10 milligram group, they received a total dose of 280 milligrams over 28 days.
280 milligrams, that's high for an inhaled mRNA.
It is extremely high. And they attribute being able to do that safely to their proprietary mRNA purification and that LUNAR delivery tech.
Yes.
It seems like they might have cracked the code on the systemic toxicity issues that really plagued earlier attempts at inhaled RNA therapies by others.
So there's obviously risk in pushing the dose that high, right? if tolerability wasn't great.
Oh, absolutely. The risk was there. Safety is paramount, and the market will scrutinize that data. But the fact they completed dosing at 280 milligrams without reporting major issues so far, that in itself is a huge technical de-risking event for the platform.
Okay. And the big catalyst is coming up fast.
Very fast. Next month, September 2025, that's when we expect the phase 2 interim data from these first 9 participants.
And management seemed to signal, based on FDA discussions, that the bar for success might be, well, maybe lower than people think. They mentioned safety, tolerability, and any positive measurable FEV improvement.
Context is key there. You have to remember the old benchmark, like a 3% FEV improvement that came from modulator drugs in different, less severe patient populations.
Right.
For these Class I patients, the expected course is actually FEV decline. So if ARCT 032 just stabilizes FEV or shows even a small gain, that would be a genuine clinical breakthrough for this group.
Okay, that makes sense. So any improvement is significant here, and they're already looking ahead.
Yes, they're planning meetings with regulatory agencies, FDA included, in the first half of 2026 to talk about phase 3 trial designs. So things are moving quickly.
Okay, let's switch to the other key rare disease asset, the OTC deficiency program, ARCT 810. That one also seems to have gotten a boost recently.
It did. They released positive interim data from the phase 2 multiple dose study back in June. That looked pretty encouraging.
What were the highlights there?
They saw good signs on key disease biomarkers. Glutamine levels, which are typically high in these patients, decrease back towards the normal range. And importantly, ammonia levels remained stable, didn't spike. And what really added weight was some orthogonal data, basically supporting evidence from an optimized urogenesis assay. It's called the 15N urogenesis assay.
Okay, break that down for us. What does that assay actually show?
It's a smart way to measure pretty directly how well the patient's urea cycle is functioning. That's the metabolic pathway this drug is supposed to help fix.
Okay.
And they observed increased relative function using this assay. It strongly suggests the drug isn't just moving biomarkers around, it's actually improving the core metabolic function, helping patients process waste better. That's a good sign.
That sounds like solid biological evidence of activity.
Yeah.
So what's the next step for ARCT 810, similar path to CF?
Very similar timeline, actually. The focus now is getting aligned with regulators. They're prepping for FDA meetings in the first half of 2026. The goal is to discuss the clinical significance of these biomarker changes and really nailed down the design for a pivotal phase 3 trial. So phase 3 planning kicks off in early 26. It creates this powerful dual narrative, 2 rare disease programs potentially heading into pivotal trials around the same time.
Right. While the market is understandably really focused on CF and OTC, we shouldn't ignore the vaccine side. That's sort of the bedrock, validating the platform and bringing in partnerships, right?
Absolutely critical. It's not just validation, it's also about potential revenue streams with partners like CSL. Costive, their self-amplifying mRNA COVID vaccine, is progressing well.
Approval's expected soon.
Yeah, they anticipate UK MHRA approval actually in September 2025, so very soon. And the US BLA filing, the main application to the FDA, that's also on track for September 2025, approval likely sometime in 2026. This really helps confirm the commercial potential of the whole LUNAR platform.
And the pipeline behind Costive, flu vaccines.
Also moving forward nicely, their seasonal flu candidate, ARCT 2138, had a positive phase 1 data, showed good immune responses against all 4 flu strains, even at low doses in both younger and older adults.
Promising. When do we see how it stacks up against current flu shots?
We expect comparator data later in 2025. And then there's the pandemic flu program, IRCT 2304 for H5N1 bird flu. That got FDA fast-track designation back in April.
And that was funded by BARDA, right? Government funding.
Fully contracted and funded by BARDA, yes. And HHS confirmed it wasn't hit by any recent budget adjustments. Phase 1 results for that are also expected later this year.
Wow. Okay, so it's just an incredible number of potential catalysts lining up for the second half of this year and into early next.
It really is, which brings us back to that market reaction we started with, that huge 30% plus jump.
It makes more sense now.
Yeah.
Investors weren't just reacting to the Q2 numbers, they were reacting to the clarity on the timeline, right?
Exactly. The call really crystallized things. It wasn't just the beats, it was the proximity and the sort of certainty around these upcoming clinical readouts, especially CF in September, combined with that long, non-dilutive cash runway into 2028.
The whole narrative shifted.
Completely. It's moved from, does the platform work, to Can they execute pivotal trials and scale up? It's about transitioning to that next stage.
And the analysts seem to agree. We saw upgrades.
Yeah, quick validation from the street. Multiple analysts maintained or even raised price targets right after the print. You saw Citi go to $49, Wells Fargo to $42, Leerink Partners hitting $54. And this all fits into the broader biotech picture, too. Sentiment has been improving. You see the XBI index showing more risk appetite in the back half of 2025. Arcturus seems perfectly positioned to capture that interest.
Okay, time for our favorite segment. Let's try to synthesize all this into a forward-looking idea. And just to be crystal clear for everyone listening, this is not financial advice. It's a thought exercise, a potential scenario based only on the data presented in the earnings call and the catalysts we discussed.
We're exploring the what-ifs based purely on the public information from the company. Plausible, maybe provocative, but definitely not a recommendation.
All right. Let's zone in completely on that September 2025 cystic fibrosis data for ARCT 032. The high-conviction long idea here really hinges on this single binary event.
Okay.
And the core logic, the reason the risk-reward might be skewed, comes down to that technological achievement we talked about. Safely dosing those very difficult-to-treat Class I patients with a massive 280 milligram cumulative dose using the LUNAR system.
Right. Overcoming that historical toxicity barrier for inhaled RNA, that's the linchpin.
Exactly. So the proposition is this. If that September data readout hits even what seems like the low end of the efficacy bar. Remember, any measurable FEV improvement in these patients who normally decline, what does that really signal?
It signals that the delivery technology works and works well, even at high doses, without unacceptable toxicity. It validates the LUNAR platform itself.
Precisely. It's not just about RTT-032 anymore at that point. The trade idea is built on this. Positive phase 2 data in CF, especially the super tough patient group, doesn't just de-risk the CF program. It fundamentally de-risks the entire rare disease pipeline.
Including the OTC program, ARCT 810, because it proves the underlying delivery system is capable and potentially superior.
Yes. So those current analyst price targets, the 40 laws, low $50, they're based on steady progress. But this data comes through in September and confirms they've solved the delivery and toxicity puzzle for inhaled RNA.
The whole company potentially gets re-rated significantly.
Massively. It becomes a leader in RNA delivery. Not just a company with promising assets. Those current targets could look very conservative very quickly. It's a bet on a multi-program re-rating triggered by this single phase 2 success. That's the potentially outrageous but plausible outcome.
A true inflection point trade if the data supports it.
Okay, let's wrap up this deep dive then. Key takeaways from Arcturus Q2. Really decisive beats on revenue and especially EPS.
Powerful financial discipline shown, extending that cash runway all the way into 2028. Critical de-risking.
And most importantly, setting the stage for huge near-term clinical catalysts.
Eyes absolutely peeled for that CF data, ARCT 032, coming in September, followed closely by more vaccine progress updates later in 2025 for COVID, seasonal flu, and pandemic flu.
The company has clearly moved beyond just building the platform. They're now lining up for registration studies.
The big question really as we look towards 2026 is execution. Can management successfully translate this platform validation into running potentially 2 large simultaneous phase 3 programs in different rare diseases?
Those FDA alignment meetings planned for the first half of 2026 for both CF and OTC phase 3 designs. Those will be the next major checkpoints after the data readouts. Definitely ones to watch. All right, that's our deep dive on Arcturus Therapeutics Q2 call. We hope this gives you the key insights and context you need. Thanks for joining us here at Talk Tickers. We encourage you to keep tracking their progress right along with us.